action for the last month on the euro US dollar, what do we see? What is the structure? So this is something that we have to ask ourselves every trading day before we start with potential trading setups and trades. So as you can see, if I use my drawer, what do I see here? If we start from here to today's price action, of course we have a bullish structure. What does this mean? It means that we have higher lows. As you can see, market is tagging all those previous days highs, it's tagging and creating new highs. So overall we have a bullish structure. So if we have like market creating new highs, new lows, then of course there are two directions within this bullish structure we can trade. We can trade the up move. Let me use the different color. We can use and we can trade the lower time frames in upside direction on those phases on the upside, or we can look for possible lower time frames opportunities such as 4 hourly, 1 hourly, 15-minute time frames in order to trade those retracements within the bullish structure. So as you can see, if I use the green color again, so just by looking at this price action, we can see we have up phases, as you can see, price moving higher, and we have also the retracements. We have those retracement phases within this bullish structure, and this is how we traded the euro US dollar today. So today, what do we noticed? As you can see, for the last couple of days, price was retracing. We had red candles. After price moved up almost 200 pips to the upside, we noticed price was a little bit toppish on those levels at 1.088, and we had a red candle. So as you can see, based on those red candles, we assumed that maybe price wants to retrace a little bit. So after price moving to the upsides, it's very healthy for the market to retrace, because the trend doesn't mean that price will just move in the vertical line, but it means that it will retrace on the way to the upside. And as you can see, as the market moved to the upside here, it looked toppish. We had kind of a toppish formation here, and we had red candle. So we said we can look for possible retracement to the downside. So this is something that we also explained in our weekly Forex forecast video a few days ago. We said that, and because the daily was retracing, we said we can look for potential short trading opportunities. So that's everything you have to know from the daily time frame. So if you go from the daily time frame to the 4 hourly, we have to recognize a structure here as well. So what do we have here on the 4 hourly? What do you see? So this vertical line, as you can see, is start of the new trading week. So if you remember, at the start of this trading week, we said okay, we have this new high, market retraced, and we said this is the low which is still holding for now on the Monday. So we said if this level will hold, we can look for possible opportunities to the upside, but that didn't happen because we didn't have any opportunity to the upside. And we said if this support, if the lows will fail, if price will start pushing to the downside, then there is a high chance that we'll see a possible reversal setup, and we can look for possible leg lower and possible bigger daily retracement. And this is exactly what happened. So as you can see, if we just use the normal lines, and if we connect the swing highs, the swing lows, as you can see, let me mark those levels up so it will be easier to understand. So what do we notice here? So just by drawing the swing highs and swing lows, so sorry for those lines. So the MT4 have a little bit funny trend lines drawing, as you can see. So I have to correct a bit. So price moved lower. We had, as you can see, if I just use my drawer, what do we see here? We have a swing high, we have this support, swing low, and then what happened after price bounced to the upside? we had another lower high here. So we had swing high, we had low, we have lower high here now. Market pushed to the downside, it spiked a little bit, lower prices were there, and then we had another retracement with another lower high. So at that point of time, yesterday we said, okay, it looks like price maybe wants to move lower. And what happened? We had another breakout and fresh new lower low here. So at that point of time, on the daily time frame, we said price is retracing to the downside, and on the 4-hourly chart just confirmed that. As you can see, if I use different color, let me use the yellow one. As you can see, the structure changed the direction here. As you can see, we had lower highs, we had lower low, and this is the first signal for us to start looking for potential opportunities to the downside. So as the market formed this lower high and lower low, what we want next is a potential retracement into the discount area. So as you can see, after price created this lower low, price decided to retrace into the discount area. So what the discount area means, it means that if the market moved from swing high to the swing low, let's say 30 pips, it means that anything above 15 pips of retracement, in this case more than 50% retracement, is it means that price is in the discount area. So as you can see, market retraced, it reached this discount area. As you can see, above 50% of this move from swing high to the swing low, and this is our area to start looking for potential confirmation, for possible confirmation on the lower time frames, for possible market structure shift on the lower time frames, such as 1-hourly or 15-minute. Those are the levels that we want to watch closely for our execution, for our setup there on this particular pair. And what is our objective? Our objective is to look for possible market structural shift on the lower time frames in order to trade, in order to target the potential leg lower, the potential sell side liquidity lying below the lows, below the swing lows down there. And this is where you want to start paying attention. That's where you want to start looking for possible 1-hourly or 15-minute opportunities. So once the market moved into this discount area, let me mark those levels up. As you can see, that's where we want to look for potential opportunities on the 1-hourly or 15 minutes. So I marked this level up, so let me remove it now. So just by looking at the price action today, so this vertical line is start of the trading day today. Market, as you can see, from the 4-hourly swing high and swing low, it moved into the discount area, above 50% area. So I want you to focus on today's price action, and that's where we got also an opportunity today. We got opportunity today on the 1-hourly and as well on the 15-minute time frame. So as the market opened here today, this vertical line, in the Asian session, market was moving higher. So as you can see, market was moving higher, creating higher highs, higher lows. And what happened after? As we were getting closer to the London session, we had first changes, we had first market structure changes. As you can see, market actually moved lower, it broke the swing low here, pushed to the downside, and on the breakout to the downside, we had also fair value gap zone here, as you can see, between first, second, and third candle. So this is very important. That's where we want to look for potential opportunities. We had a swing high, market moved lower, created new swing low. The previous lows were broken, so we had potential structure shift here on the 1-hourly. So price moved down 10 pips. We had fair value gap zone, new low was formed, and what we want to see, we want to see retracement into the fair value gap zone and discount area. And as you can see, that's where we have to wait also for the London to open. So London opened at 10 a.m. this brokerage time. In my time zone, that's 9 a.m. So as you can see what happened after London Open, this is just beautiful extra confirmation. The Asian high was taken out. This is just an extra confirmation. The liquidity was taken out on those two spikes. And this is, as this happened, this is your perfect area to look for potential short trades. As the market bounced back lower and the price is still in this fair value gap zone on the 1 hourly. Let me draw it, as you can see. As the price is still above 50% discount area in combination with fair value gap zone, this is your area to look for shorts. So in this case, your stop loss will be at least 10 pips. You will be targeting the sell side liquidity or the yesterday's lows around 15 pips away, or even if you would let this trade run, you could aim for more. You could aim for 1 to 2, 1 to 3 in terms of risk and reward ratio, but of course you don't need that. On the long term, it's enough if you have 1 to 1 or even more, let's say 1.5 in terms of risk and reward ratio, and you could be really successful trader on the long term. You can live from trading, you can manage the other people's money if you can do that consistently. So that's the setup we had on the 1 hourly time frame. And let's jump to the 15-minute time frame as well. This is also where we had the setup on the 15 minutes. So as you can see from the 1 hourly time frame, we said the previous highs were taken out of the market. The 1 hourly setup was there, so you could trade it, but on the 15-minute time frame, if I remove those two lines, on the 15-minute time frame, we had also the structural change. As you can see, as the London opened, we had lower low. We had on the breakout to the downside, we had also fair value gap zone between first, second, and third candle. And we had nice retracement into the discount and fair value gap zone. So if you didn't trade the 1 hourly setup, you had another confirmation from the 15-minute time frame as well. So this was your perfect spot to look for entry. Stop loss above the structure, above the highs, at least 10 pips. And you could aim, of course, as I said, the yesterday's lows, 10-15 pips away or even more. And imagine how your results could look like if you can do that repeatedly, consistently. And if you just focus on those high probability setups, if you wait for those setups to appear right away on the charts in front of you, and if you can execute them and manage them correctly, focusing on 1 to 1, 1 to 2, or 1 to 3 in terms of risk and reward ratio, depends on your style. And if you can just do that with classic 1 to 1 or even a little bit more in terms of risk and reward ratio, you can be really successful. And that's how you can trade the markets consistently. In this case, we explained how you can trade those daily retracements. And today on the Euro-US dollar, this was really beautiful setup, beautiful opportunity there. And yes, just learn from those kind of trades, from those opportunities, and then just repeat day after day, and you will be successful. So just with the correct mindset, with correct risk management, and of course with clear and specific trading rules. So thanks for watching. Hope you learned something from this video, and we catch up soon. Take care.